traders, this is Mike Hamilton for Trade the Easy Way, and what a day. So very unexpected leave vote in the UK referendum. I was watching television at midnight last night, and when I went to bed Nigel Farage was conceding. The UK key member of the political community who tried to initiate this referendum in the first place. So let's not get too excited about this market. I think we need to let this market settle down. I think some bargain hunters have come in at this low. I shorted 50% retracement in this market and then took it down to 500. We're now just above the 500 mark, so I'm walking away now. We've got 3.5 hours left in the markets, so this is not what you're going to see at the close. I don't know where it's going to close, so obviously you need to check that. So what I'm looking for in such a massive downforce today is a lot of this shorting the American market will not been able to get into, because this started shorting after the US markets were closed and as we got to midnight in the UK. So I think we could see a boomerang trade back into this resistance level up here, similar to what we experienced down here in December. We had a big down day here, followed by, and it spent the next sort of few days climbing higher. We were in this range and then we eventually came out of it. I think it's the most likely scenario here. We've got earnings kicking off in 2 to 3 weeks, 2.5, 3 weeks. So I think the markets might, I'm hoping they bounce back, give us a chance to get short at a much higher level. I think this is a distribution pattern here. We've had a big sort of flush to the downside that a lot of people have missed out on, and so I'm hoping that we get a similar sort of three-wave pattern up here. Well, actually we've had 3 waves. You include this wave here, 1, 2 and 3. I don't think this wave's complete yet. I would hope we get some sort of push back in. So my suggestion to you is you sit tight on Monday, maybe take a look at the markets towards the end of the US session, and then potentially either get short at that stage or wait until Tuesday or Wednesday of next week and see if that is going to recover and let you get short for another wave down. The main focus for me next week, I'm away the first 3 days next week, but I'm back on Thursday. The main focus is Thursday because we've got the UK current account. Now the UK current account deficit is horrendous, so we need to see some improvement in that, otherwise that could really upset the apple cart. So I am looking for distribution patterns in stocks and currency pairs, looking for greater strength in the dollar. The Fed chair said she would wait until the referendum vote and avoid raising rates before that vote. Now, who knows what she's going to do? But let's put that to one side and just concentrate on the market. So I'm waiting for this market to recover, to bounce back some. It's going to leave us with, obviously, like I said, we haven't got the close yet, but if we can hold 520, hold the 500 mark, we could, that leaves us with a lower close, but it doesn't leave us with a disastrous area. And I would just look for any push into that kind of trend line. Let's look at let's take into account the dollar now, and let's start off by looking at the US dollar CAD on the weekly chart. So we've hit the 50% and this support level down here. Oops, I didn't mean to do that, but let's keep that there anyway. And the London's market is closed now. Obviously, we've got a few more hours before the whole market shut down. But we are closing high just under the 130 mark. So next week I would look for a swing long around about 800, 850 to see if we can break higher. If you note on the MACD, we are bottoming here, beginning to turn here, and we're running out of momentum to the downside. Stochastics is already ahead of us, so there's plenty of scope for this to start to come back and approach 137 area. On the pound, obviously the pound is the hot subject, so let's have a look at the pound. 30, we hit 30-year lows, so this is a horrendous situation for the pound. And yeah, the Bank of England governor was on the radio talking this morning, looking to put more liquidity in the market, saying UK banks have prepared for this, and liquidity in banks is good, but nonetheless, we are seeing that's a huge, massive volatility, massive spike lower, and the most obvious place to get short is 140. Okay, higher will be better, so 141.50 if at all possible. As soon as we hit the floor so much, I would look for that sort of level. If you look at, let's find any comparable 0708 moves like this. Let's go back a bit further. So this is this is one of probably the biggest weekly bars known to the pound, I think. If we look higher up here, there's a big bar on August 2008 that consolidated from middle of August until it a rise late August and didn't start the next leg down until September. However, I'm just looking at this current account data next week. Hopefully that shows some improvement. That'll give us a push up into these levels to then allow us to get short. But that's right, that's a weekly chart, isn't it? I thought I was looking at the that was a daily chart. I thought I was looking at the weekly. So there's a big bar. October 2008. Spent the next week climbing from 153 to 167 nearly, and then we rotated back to the trend afterwards. So after such a wide shock, I think it's feasible that we could come into these levels up here again and then inch lower into next week and beyond. Okay, so tread carefully. These are very, very volatile times. Euro. Let's finish up on the euro. I don't want to look at a lot of charts here. Let's just focus on the main charts. Daily. So here's the major trend line. We're closed underneath it. Any push back into this one is probably the better one to trade from the point of view that it's less volatile, but potentially going to give us an easier ride in. So any push into 112.50, not too much to ask. 125 point pip move higher. Again, we could see a boomerang trade. I think I'd be inclined just to leave the charts looking like that. Actually, let's see if we can boomerang back to that resistance level, and then over a period of a few days, and then start the next descent, next leg down. Stocks, some stocks are going to do well in this sort of environment. A weak pound with an organisation that has overseas interests and has a lot of dollar income is going to benefit, and Rolls-Royce is one of those. So if you're looking for hedges, obviously be very, very careful in this kind of volatility, but this Rolls-Royce could over a period start to base around here and potentially start to climb back. Let's not write the UK off. Let's not just get completely short this market. Even in a downturn, even in a tough climate, some stocks will rise. So look for stocks that have got good dollar income, dollar trading. Another one is Standard Chartered. This did well. I mean, you know, this is quite some day for the UK market, and look how we finished. We finished well. So if we can come down and test the lows again and hold, I would want to dip into that. Of course, if we come down here and we can't hold this, then we're toast. But I think this is relative strength. This is a huge momentous day for the UK, and this one stood up to the test of time. So watch this chart pattern. Give it time. Let the indicators like the stochastic come much lower, and then pick your moments. See if you can get a very low risk trade with the potential for that to climb back up. We're between the 50 and the 200-day moving average anyway, so expect a lot more chop. But just a couple of ideas there. But if you're looking for good shorts, then I talked about this one last week in the room. This is 3i, so the ticker is III in the UK. Now got a massive gap up here at 556. So any pullback, any rallies are shortable as long as you've got good risk management controls. That's crucial this market. Position, size, and controlling your market is going to be absolutely crucial in this. Right, as we speak, the Dow is not holding 500 and is creeping lower. Right, so my message to you is be very, very cautious in this market. Be careful. Look at lower volatility forex pairs like the euro, and pick your time. Be patient with these markets. We've still got over 3 hours to close in this. So there's always the prospect that this could recover. In fact, we're coming just to a key fib support here in this overnight range. And I'm planning a new website. So the website is very, very close to launch. Got a much better membership package for you lined up, and I'm going to be introducing some new live events. And we've got an event scheduled. I will schedule it for next week, late next week, Thursday night, for how to protect your assets, particularly if you're a Brit and you have sterling accounts. Alright, I do hope you have a good weekend. Like I said, I'm not around until Thursday next week, and stay safe. Bye for now.